Hello and welcome to Inside India. Happy Monday. I'm Amitabh Singh and these are your headlines. Fed Chair Jerome Powell pushes back against the Justice Department's threat of criminal charges over a Senate testimony, saying the dispute is about President Trump's push for lower rates and reviving the debate on Fed independence, sending U.S. futures lower. We could also be in for more volatility this week as the Nifty comes off its worst week in nearly 4 months, with big tech earnings also kicking off later today. And as President Trump weighs strong options on Iran amid the growing protests in the country, what will it really mean for Indian energy imports? All right, there's a complex web of activity in the Asian markets. Let's get to JP Yong for a quick check on what all is happening. JP?
Yeah, and a happy Monday also, Amitabh. And you can see here from what we're looking at how these markets are doing today. Well, pretty green actually for the start of the new trading week, and you can see there's a lot of optimism, brushing off any concerns about that uncertainty with regards to the recent, the growing tensions that is between the Federal Reserve and the White House, it seems. What's up with Wellington, though, might be the question right now. They are one of the few markets that are in the red today, although not by much with regards to the New Zealand index. The Thai set also trading marginally in the red today, but everybody seems to be quite optimistic right now. Gold miners in Australia propping up the ASX 200 in Sydney. Keep in mind the Japanese markets are offline today because of a holiday out in Tokyo. But once again, all eyes on the South Korean Kospi, which has hit yet another fresh record high. And this time, it's not just the semiconductor plays here, Amitosh. You can see here the likes of Samsung and SK Hynix, both leading the charge. But again, LG Energy Solution, one of the leading battery technology makers, EV battery makers in the world, up by about 4.2%. Not so bad for Hyundai Motors. They're also surging by about 2.88% in today's session. So you're seeing across many sectors, particularly in the tech space, it seems that the Kospi is getting a boost from many different parts of that particular benchmark. Now, we did mention the Japanese markets are offline, but take a look at how the FX markets might be treating the Japanese yen today, because once again, we're seeing more weakness for the local currency, despite the fact that equities are offline out in Tokyo. Keep in mind that right now, at just under 158 against the US dollar, it is at its weakest levels actually in the since 12 months ago. And again, something to watch out for because we're seeing more volatility, and we'll watch out for any possible commentary from officials there, from the central bank all the way to the Ministry of Finance, as to whether or not they might threaten intervention. Because once again, one of the worrisome things that they're looking out for there is excess volatility and excess weakness for that local currency. As we mentioned, the Japanese yen now exactly at 158 against the US dollar, Amitosh.
Yeah, thanks so much for that, JP. We're also tracking anything to do with snap elections, of course, in Japan. But quick check on the U.S. futures. The activity there is heightened, pointing to a negative start at this point in time. Remember, U.S. Fed Chair Jerome Powell confirming in the last couple of hours reports that the Trump administration has threatened him with a criminal indictment linked to his testimony before a Senate banking committee last June. Powell issued a statement calling it an unprecedented move, a pretext aimed at making the Fed move on interest rates.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
President Trump, meanwhile, telling NBC News that he, quote, doesn't know anything about the Justice Department's investigation into Powell. The Indian markets come online in about 40 minutes. They'll be factoring that particular news into GIFT Nifty futures, indicating a bit of a muted start. It's 25,793 is what it's indicated to be. Remember, it has been in the range of 26, 300, 400, 200 for the week before last. But last week was not good. Indian equities ended lower on Friday too, extending their losing streak to a fifth straight session. Playing into the sentiment is, of course, a couple of things. Trump's 500% tariff threat through a new bill, contradictory comments from the commerce ministers of both sides, uncertainty, of course, around the U.S. Supreme Court's possible intervention on the legality of Trump's tariffs. And this morning, the market will weigh in the question of the Fed's independence after Fed Chair Jay Powell did just just that, face the Justice Department's threat of criminal charges, and investors will have more data to go by as earnings come in from the IT companies and the likes of Reliance later this week. Taking a look also at oil prices, given all the geopolitical uncertainty, rising in Asia trade today just a little bit. ICE Brent up 63.38, 0.06% up, and WTI 59.15, inching closer towards the 60 mark. We're keeping close tabs, of course, on Iran. That's the biggest geopolitical shakeup right now in the midst of its biggest wave of protests since 2022. No official toll has been given, but a rights group saying more than 500 people have been killed over the last 2 weeks. US President Trump has vowed to intervene if force is used on protesters and told the press earlier that the military could have, quote, very strong options on Iran. He also says he may have to meet Tehran to negotiate on nuclear, and that he's spoken to Iran's opposition leaders. Of course, in the middle of all of this, Venezuela remains a factor. Trump meeting with U.S. energy executives on Friday, telling them the South American country is, quote, open for business and urging them to ramp up their investment there quickly. Trump telling press that America's presence in that oil market will not block out Venezuela's existing customers like China or Russia.
One thing I will tell them, and I will tell you, that we are open for business. China can buy all the oil they want from us there or in the United States. Russia can get all the oil they need from us, and they do like oil, even though they produce a lot of it. But China and Russia and everybody else is able to go, and we'll be open for business almost immediately.
Well, the oil market and everything to do with shipping really feels like a maze right now. Our travel and transport reporter, Monica Petrelli, has, of course, been watching Venezuela closely and joins us now with the latest. Monica, take it away.
Yeah, good morning, Amatosh. So the White House not getting nearly the enthusiastic response that it had hoped for in that meeting with major oil company executives on Friday, a meeting where U.S. President Donald Trump hoped to receive pledges for around $100 billion. Chevron, as the only major U.S. oil company currently operating in Venezuela, said it's ready to play ball, but it was a very different story from ConocoPhillips and Exxon. In fact, ExxonMobil CEO Darren Woods saying currently Venezuela is uninvestable. Now, Donald Trump not holding back his disdain for those comments, telling reporters today that as a result, he may be inclined to exclude Exxon from the potential to develop Venezuela's oil market in the future. Now, also on Friday, Donald Trump signing an executive order saying that the plans to sell between 30 to 50 million barrels of oil, the proceeds of this would be belonging to Venezuela and Venezuela alone. This is thought to be an effort to ward off claims from this money from both courts and creditors. Creditors, which include companies that Trump is trying to get to invest, ConocoPhillips and ExxonMobil, which collectively are said to be owed more than $13 billion due to assets that were confiscated when then President Hugo Chavez nationalized Venezuela's oil industry back in 2004 and 2007. Now, finally, Treasury Secretary Scott Bessent saying the U.S. may lift additional sanctions on Venezuela as early as this week, a move which could help India's oil market, which has been looking for a way to diversify away from buying Russian crude, given its outsized role in India's current 50% tariff rate from the U.S. This may especially help Reliance, which said it stopped buying Russian oil back in November. Back to you, Amatosh.
Thanks so much for that, Monica. In the meantime, U.S. Treasury Secretary Scott Bessent is set to host top finance officials from the G7 later today in the U.S., where he's expected to press for stronger efforts to reduce reliance, of course, on China for critical minerals. The U.S. is expected to issue a statement after the meeting. Those sources tell Reuters no concrete joint action is likely at this stage. India has also been invited to the G7 meeting. The Minister of Electronics and IT, Ashwini Vaishnav, arrived there earlier. Sumedha Dasgupta is a senior analyst at Economist Intelligence Unit, and she joins us for more on this. Sumedha, thanks so much for joining us. Appreciate you taking the time out. I want to start by asking about possible U.S. intervention in Iran and what that means, because 500 people have reportedly died, while Iran uncommonly joining BRICS plus countries, China, Russia, South Africa, in South African joint naval exercises in the waters there on Saturday. Where would India be standing in all of this?
Thank you so much, Amitosh. So technically, I would think that India's biggest concern would be projects that it's doing with Iran, for example, development of the Chabahar port, which, for example, is very important for India, especially given that the projects like INSTC, IMEC, etc., the infrastructure corridors, which would be good for trade, are very unlikely to actually pan out quickly in the geopolitical environment that we are seeing. So India has been trying to diversify its ports of trade as much as possible. So while Iranian oil and imports from there is potentially not really the biggest concern for India, that's actually a very small basket. These are going to be the kind of things that India will be concerned about. We've known that US has, of course, given sanctions waivers on India and Iran developing Chabahar. But how long that would continue, if there is a regime change or if there is any sort of US intervention in Iran, would, of course, be India's primary concern at this point of time, I feel.
All right. I'm not sure how India is going to be able to address that, whether it has geopolitical weight to actually talk to the US and perhaps find a solution that will be in their interest too, even if President Trump is planning intervention. I want to ask about Reliance, because India's Reliance is also seeking US permission to buy Venezuelan oil. Even as Trump has met these energy companies that we were reflecting right now on our news, they met these executives on Friday, asked them to up their investment game there quickly. Is Reliance looking to offset its reduction of Russian oil purchases? And if so, what will public sector companies do? Because we haven't heard much about them.
Yeah, certainly Reliance would be looking for some sort of a diversification area, definitely, especially since November, when imports of Russian crude oil have become especially difficult, obviously hitting refiner margins. So prior to March of last year, of course, there was some amount of crude flowing in from Venezuela, and we know that since March of last year, when President Trump threatened an additional 25% tariff if you import crude from Venezuela. India, in any case, from 2021 had already reduced crude imports from Venezuela very significantly. Till 2020, it was very high. It's been actually following all sorts of let's say, instructions that have been coming from the US side on don't import from here, import from there. So obviously, if Venezuelan markets do open up, that's very good, because Indian refineries also have undergone a lot of upgrades to be able to refine that kind of crude oil. So the crude oil that flows in from, say, Venezuela, Guyana, these kind of places. So obviously, that would be a win-win situation, that you actually get to utilize all the investment that's gone into upgrading those refineries by, again, being able to import Latin American crude oil. So definitely there would be both private as well as public sectors company, I would guess, that would be wanting to look at this diversification as well as possible.
Yeah, we'll have to wait and see what happens with Reliance actually getting that permission. India has also been invited, as we reported, for the rare earth talks by the US as part of the G7. India's IT Minister Ashwini Vaishnav has reached there. Talks are later today. There's no expectation of some joint declaration or something. But how could this really impact the Indian market? How would companies related to this sector react?
Well, certainly this is a very positive development that India is participating in a meeting like this. We all know that India does have a lot of climate-related constraints. India has very ambitiously charted out a net zero target by 2070. There is obviously a dependence on getting access to critical minerals as far as possible in order to be able to meet this target. So definitely it will be in India's interest, as well as something that the government would be looking for, assessment as access that's possible. In this vein, sort of also step industrial relations with Africa, which is a very important market for critical minerals. So, China, obviously, the head start of there. And because which are generally facing highs and lows, this is not really something that India can sort of rely on, that China will always be favorable
we'll
to
just
India
be back
in terms of critical
with
minerals.
Sumedha and fix that connection a little bit. Sumedha isn't going anywhere. We're having a continued conversation. There's a lot to cover with her. We'll come back after this. We'll track the latest on the trade front with German Chancellor heading there to India for his first Asia trip. Stay with us. You're watching Inside India. Welcome back. This is Inside India. German Chancellor Friedrich Merz is in India for a two-day trip, and on his first visit to Asia, Merz will meet Prime Minister Narendra Modi in Ahmedabad, with talks expected on trade, semiconductors, critical minerals, defense cooperation. Several agreements are likely to be signed, including steps to ease the entry of Indian healthcare workers into Germany. The visit comes as Europe pushes to diversify supply chains and reduce reliance on China. Merz is also expected to press for faster progress on an EU-India free trade deal ahead of a planned visit by EU leaders later this month. Late last week, India's Commerce Minister Piyush Goyal was in Brussels to advance those FTA talks. The two sides had set a target to sign it by the end of 2025, but key sticking points still remain. And late Friday, US Commerce Secretary Howard Lutnick said trade talks between Washington and New Delhi have stalled, and that's, quote, because Prime Minister Narendra Modi did not make a phone call to President Trump. Lutnick made the remarks on the All In podcast, a US show focused on business and tech. India has pushed back on these comments. New Delhi says the two leaders spoke multiple times last year, and an Indian Foreign Ministry spokesperson reiterated that trade negotiations are still ongoing.
India and the United States were committed to negotiating a bilateral trade agreement with the US as far back as 13th of February last year, that is. Since then, two sides have held multiple rounds of negotiations to arrive at a balanced and mutually beneficial trade agreement. On several occasions, we have been close to a deal. The characterization of these discussions in the reported remarks is not accurate. We remain interested in a mutually beneficial trade deal between two complementary economies and look forward to concluding it. Incidentally, Prime Minister and President Trump have also spoken on phone on 8 occasions during 2025, covering different aspects of our wide-ranging partnership.
We're back with Sumedha. Sumedha, Piyush Goyal, India's Commerce Minister, was speaking to Indian media also, and he said that Indians should trust their own government after these comments by the US Commerce Secretary. What I want to understand is the likelihood of a trade deal like looking even lower now after these comments that have come in? And how does the market or the RBI factor that in, if at all? Because you're looking at this for forecasting, you're looking at this for many things. How does this play into the minds of those who are making decisions at the central bank level or in big companies? Remember, earnings are coming up. So how does this play out?
Thank you. No, I wouldn't actually say that these comments are negative from the perspective of expecting that a trade deal is going to come through, because we do know that Mr. Trump has the habit of speaking off the cuff. Many people in his administration also share a similar trait. So I wouldn't really say that, because these kind of comments have come through even earlier, ever since August of last year, and there's still been progress on negotiations. There's been definitely progress on both sides. There's been a lot of talk. So everything is not just what's being spoken in the media. I think I would expect that a trade deal would certainly come through by the first half of this year. I feel that the way that the central bank is looking at it at this point of time is to wait and watch. So I don't expect that in February they're going to make any kind of rate move. I feel that if they don't have enough information on which direction the trade deal is progressing in, then potentially we will see another rate cut in April. But we also have a backdrop of fairly strong growth, though, of course, keeping that growth strong in an environment where the US trade deal does not come through is going to be challenging. So, of course, the government will then have to rethink its metrics in that sense. But I would still think that a trade deal is certainly on the cards and it's going to come up within the next couple of months.
I want to ask you, because another question on tariffs, because the US Ambassador Sergio Gore will be assuming duties at the US Embassy, would have assumed duties today. Should the market really consider the possibility of 500% tariffs through a new bill or a delayed trade deal? Given the continuing geopolitical uncertainty and general tariff uncertainty in terms of whether a trade deal is happening or not, or should this be considered as just bluster, that is something that you refer to?
Well, I think that is a really devastating situation, which is effectively a trade embargo, right? So I don't think that is certainly not something that markets or any forecaster would baseline consider. Mr. Gore, of course, we know is very close to President Trump and generally would obviously want to kind of keep up the pressure tactics that the U.S. has generally been using on not just India, but every single trade partner that it's been talking to. So I don't think that doomsday kind of prophecy is likely to come about. India is obviously a very, very important market for the U.S. It's not just a one-way street. So I think that definitely trade talks will continue and we will have a fairly favorable deal over the next few months, as I said.
It's interesting that you have this positive outlook because there are those who never imagined that there would be a 25% penalty because India was buying oil from Russia. That was also a bit of a shock for India. You're saying that this 500% is going to be a shock. It's unlikely because of that. And India is an important trade partner. But at the end of the day, India is the 8th most important trade partner for the US. And for the US is the 1st most important partner for India. So in that context, I just want to understand what happens if the trade deal doesn't happen for India. What is your outlook then?
Well, if the trade deal doesn't happen for India, and if it is a situation of a trade embargo, as I mentioned, something like the 500% which you are talking about, or even if this 50%, of course, we have to remember that there's a great difference between a 50% tariff and a 500% tariff. So the optimism that can still stay at a 50% obviously goes away at 500%. So in that case, obviously, the government and the central bank of India will need to pull out all stops. We will see it's going to be, say, a COVID-like situation where obviously there's going to be a significant slowdown in livelihoods, especially of labor-intensive, export-oriented sectors. A lot of them are MSMEs in India. So there will need to be a lot of subsidy plans that the government comes up with. So these are obviously going to be tailored if we do get to that situation. But as I mentioned that, keeping a 50% tariff and having that for a while is not the same as putting a trade embargo with 500%. So we should still be optimistic on this front.
Okay, in the interest of being optimistic, let's talk about the EU FTA potential deal. The German Chancellor visiting India, the Commerce Minister Piyush Goyal was in the EU recently. Now, of course, he's back for the elections of the country's richest civic body in Mumbai on the 15th, which is a very interesting story, by the way. Is it possible that the talks are slower than anticipated because they require these technical working groups on each sector, the EU talks? I ask this because they are trying to factor in all the geopolitical changes that are taking place into this trade deal also, and that's such a difficult thing to do, as I understand. So give us your take on that.
Sure. So I feel that India and EU, and this is something that I've said before, India and EU are basically getting what I always call the Trump push. So at this point of time, of course, they are really, really trying to get the trade deal done. Both of them are scouting for reliable commerce partners, trade partners as far as possible. There are certain holdups, obviously, in the deal. Things like CBAM will be there, the steel quotas that the EU has, agri-market access that the EU wants in India, labor mobility that India wants from the EU. So there are obvious sticking points. But I feel that the fact that they have made so much progress in the deal, the fact that there is a commitment to push the deal over the line, is actually something that's likely to see this deal through. Now, the geopolitics that you're talking about, this is evolving really fast. And this is something that nobody had expected when they were starting to talk on the deal. And in fact, even at the start of this year. So it's obviously a much more challenging environment for negotiators who are trying to factor in everything, even factor in the unknown. So the known unknown is fine. The unknown is what you still need to factor in. So I think that certainly this trade deal is going to get pushed over the line. I would be a little skeptical to say that it'll be done by January end, which is what everybody's sort of thinking because there's an India-EU summit at that point of time. But definitely, I think the first quarter is looking quite doable for the EU deal. So that's potentially going to be another feather in India's trade deal blitz gap, as has happened in December also with New Zealand and Oman.
Okay, and obviously, I'll have to consider your answer on what if that doesn't happen in the same way that you mentioned your US comment. But I want to talk to you about 2 points. One is Germany trying to basically get a lot of students into Indian students into Germany. Remember, Germany has been stuck in recession for 3 years. India, the fastest growing major economy, and it needs skilled workers. Germany, India is now the largest group of foreign students in German universities. You talked about labor mobility, but in the last interview that you did with us, you also said India's got an unemployment problem. There's already a mismatch between the skill level of the country's workers and the demand for high innovation from employers, is what you said. This will persist definitively over this decade, possibly into the 2030s as well. So how does this play out if India is not skilled enough?
Well, I think the problem is actually not that India is not skilled enough. There is a section of the Indian population, certainly, which is highly skilled, and there is a section which is getting skilled. So there's obviously, along with that, it's a large population. There will be a section who are, say, semi-skilled or unskilled, whose obviously potential will still remain within India and not in very high formal sector jobs. But as for the skilled sector of people, there is, of course, a growing let's say, anti-immigration sentiment across everywhere.
Right.
And that really needs to be factored in, because it's not as easy to move outside as it was earlier.
Okay.
So certainly they will be looking for things here.
Okay, thanks so much, Sumedha Dasgupta, Senior Analyst at Economist Intelligence Unit. We'll be back after a very short break. Welcome back. This is Inside India. Trump has raised the issue with heavy foreign activity in the Arctic region, especially China. And Beijing has been investigating big, putting money into shipping routes and mineral extraction after Beijing's security interests on a direct collision course with the U.S. in the Arctic. Our China reporter, Elaine Yu, takes a deeper dive. Elaine?
Hey, Amitoj. So Trump has threatened to annex or buy Greenland, saying that Chinese and Russian ships are all over the island. Now, Nordic diplomats have rejected this, saying there are no signs of Chinese and Russian ships or submarines sighted in recent years. But let's also take a look at the state of China's Arctic investments. So in 2018, Beijing released its first Arctic policy white paper, saying that its goals were to understand, develop, participate, and protect the Arctic and its governance. And in 2021, for the first time, the building of a polar Silk Road and pragmatic cooperation on the Arctic were written directly into China's 5-year plan. And at the heart of the strategy is the Northern Sea Route. This is a 6,000-kilometer corridor along Russia's coast. And for China, that means a massive shortcut. In October, just last year, the first vessel called the Istanbul Bridge sailed on this China-Europe Arctic Express from eastern China to East England in just 20 days. And China has hailed the journey as a win for the planet, saying shorter trips means lower carbon emissions compared to especially, say, 40 days via the Suez Canal. But this environmental angle is a double-edged sword as well. Clean Arctic Alliance has warned that increased intensive shipping and traffic could create noise pollution, disrupting marine life, and also increasing greenhouse gas emissions that will accelerate the climate change that's already causing the ice to melt. And there are other physical limitations as well. This is a seasonal trade corridor, roughly around July to October when the weather is warmer. And there are also high technical costs, since you need specialized vessels with reinforced structures to navigate these icy waters. And sometimes you'll need icebreaker fleets as well. But China does see this as an important long-term investment, especially when it comes to diversifying its trade routes and to bolster its economic security, especially as trade tensions rise, and also with China concerned about global trade being reliant on a couple of vulnerable choke points like the Suez Canal and the Malacca Strait. Amitosh.
Elaine, talk to us also about the narrative versus the reality. Most of China's Arctic investments are in Russia, while a number of those in Nordic states and Greenland have stalled or failed. Tell us more.
Yeah, that's right. So China has funneled billions into the Russian Arctic, including natural gas projects, although one of them, the Arctic LNG 2, where China has a 20% stake, has stalled because of U.S. sanctions. But in 2024, China has sent 3 icebreakers to the Arctic, which analysts say is where China and Russia are deepening cooperation as well when it comes to icebreakers. But beyond Russia, that's where the story is very different. There have been various infrastructure investments and research facilities in Nordic states, but in recent years, airport contracts have been canceled because of U.S. pressures on Danish governments, and also research stations have been halted over security concerns. But it's not just geopolitical and factors. There's also market and environmental concerns at play, according to Frederic Lasserre, the director of the Quebec Council for Geopolitical Studies. Let's take a listen.
The Grant Field rare earth and uranium project was cancelled by the Greenlandic government, not because it was a Chinese and Australian venture. It was really cancelled because of the fear that if uranium was extracted along with the rare earth, there would be threats to concerns with the environment. As far as the Isuian field is concerned, it's really because the Chinese firm, the General Nice, couldn't find a way to develop the project profitably, and so it was revoked by the Greenland government because the project was going nowhere. So you see, there are issues with profitability because it's very hard to develop profitable ventures in Greenland because of the Arctic harsh conditions.
And indeed, the gap between narrative versus facts on the ground appear widest in Greenland, where, according to a Harvard study last year in June, 7 out of 8 proposed Chinese investments in Greenland have failed or never materialized. But China's polar strategy has had some early success with the vessel sailing through the Northern Sea Route, for example. But experts also say Chinese investors have become more cautious in terms of investing in the region because of these geopolitical uncertainties. Amitosh?
Thanks so much for that, Elaine. We'll come back to you, I'm sure, for more details as this situation develops. Now, gold hitting another record high on the safe haven demand right now. It is something we've been watching very closely. It did hit 4,600 per ounce just a short while ago. This was for the first time, while silver also jumped to a record high, bolstered, of course, by these geopolitical uncertainties. Now, we're also counting down to the market open in India, where, of course, there's always an increased interest in gold and silver. This is how we're shaping up. Gift Nifty futures indicating that it's going to be about 25 787. So just about 100 points jump. Nifty 50 at 25,683 after falling 5 days straight in last week. Of course, the rupee also weakening to the dollar. Shuffling around a little bit, but going above 90 would largely be seen as weakening because it has been in the range of 89s also in the last couple of days. Now, India's market regulator says it will issue approval this month for the National Stock Exchange to begin preparations for its long-awaited IPO, really long-awaited IPO. SEBI chairman Tuhin Kanta Pandey said a no objection certificate will be granted, allowing the NSE to start work on its prospectus. The move follows years of litigation after SEBI fined the exchange in 2019 for failing to provide fair market access. NSE has since offered a $160 million settlement. Once cleared, the listing would mark a major milestone for India's largest stock exchange. Speaking of IPOs, Reliance Jio Platforms is considering an IPO offering later this year that could become India's largest ever, potentially raising more than $4 billion. Reuters sources say Reliance may float just 2.5% of the company, valuing Jio at around $180 billion or more. Jio, led by Mukesh Ambani, has over 500 million users and has expanded into AI, backed by global investors including KKR and General Atlantic. At a summit over the weekend, Ambani also spoke about Jio's plans to build its own large language model to be backed by its AI data center in Gujarat that already is in the works. Take a listen.
We are building India's largest artificial intelligence-ready data center with a single goal: affordable AI for every Indian. Jio will launch a people-first intelligence platform built in India for India and the world, enabling every citizen, starting from Gujarat, to access AI services in their own language, on their own device, every day, to make them more efficient and productive.
The question is, could this be even cheaper than what DeepSeek managed to do? It's that time of the year again also. India's IT sector companies will start reporting their earnings later today. The largest among the lot, Tata Consultancy Services and HCL Tech, will open the third innings of the year, followed by Infosys, Wipro and Tech Mahindra. The earnings are expected to be tepid or muted. 9 brokerages expect the top 6 IT firms by revenue to post just about 4% year-on-year revenue growth and a 5% profit for December quarter on average compared to the September quarter, which had about 6.5% revenue growth. The focus has been on India's IT companies since Liberation Day, April the 2nd. The Nifty IT index, remember, crashed in April, hitting a 17-year low. It accounted for about 15% of Nifty 50 back then, but fell to about 10%, that overall standing. Remember, uncertainty related to the US and tariffs, H-1B visa, and the impact of AI on restructuring and layoffs. All of this are playing an outsized role in the future of these IT companies because the US is the largest market for the 282 billion Indian IT sector. Sumit Jain is a senior analyst, research analyst at CLSA, and he joins us for more on this. Sumit, thanks so much for being with us. I appreciate this. You've commented in the past, and one of the things that stuck out for me, you said that for you, when you look at these IT earnings that are coming up, revenue per employee is the most important thing. I want to just dive into that because it improved because of AI being leveraged this year, but just about 1.8% is my understanding. This is the average. But what's not clear is that not all companies are sharing this detail about revenue per employee. There's a lack of, transparency, there's obfuscation, or just as the data is coming in right now, it's still early days. What's your take on this?
No, I guess, if you are using AI tools to be more productive, what it does mean is that each and every employee has to deliver more on an hourly basis. And that implies the IT service companies can take a price hike from their clients. And that means your revenue per employee or the EBIT per employee both should improve going forward. And, we have seen that the companies whose AI capabilities are good, and what I mean by AI capabilities is they can actually build the backbone of their clients to develop AI platforms. And the backbone means migrating your apps and data to cloud and building data pipelines. So these companies who are doing such kind of job and you are using the latest AI tools in your delivery, I guess they will definitely see improvement in revenue per employee and EBIT per employee. And I think in terms of disclosures, Amitoj, you asked, see, it's a pretty straightforward metric. You take the overall revenues reported by the company, and they, of course, do give their headcount on a quarterly basis. So that's the revenue per employee, but that's a combination of your pricing on an hourly basis, plus your on-site offshore ratios, plus your employee utilization. So obviously, you have to get a direction from the company what's happening to the pricing, apart from utilization and on-site offshore ratios.
And in your view, are you getting that kind of direction? And I say this because we do know that HCL did reveal their AI revenue, Gen AI revenue, but not clear on some of the others. It's taking them time. I'm not sure what's going on there. What's your take?
Yeah, see, I mean, this is a story which is repeating again after a decade. I mean, if you recall a decade back when digital cloud started to become mainstream, that's when almost all IT companies globally, including Indians, started reporting digital revenues. And I guess very similar story we have seen playing out in the last 1 to 2 years, where Accenture, given the bellwether, started disclosing AI revenues almost 1.5 to 2 years back. And then Capgemini followed, and no wonder HCL started giving their advanced AI revenues last quarter in September, and then TCS in their recent analyst meet called that almost $1.5 billion revenue they generate out of AI. But the one key question which investors keep dabbling with is how to define these Gen AI revenues, and does it include the work around building the AI platforms in terms of data and cloud, because that is something which these companies have been doing for the last decade. So I guess what investors want to look at is whether the overall revenue growth is higher than the industry average, irrespective of where your AI revenues are. So I guess that's what companies should focus on, and that's where we believe that Accenture actually in their last earnings call mentioned that they will stop reporting Gen AI revenues, which means that they believe in almost everything you do, Gen AI is involved, and that's where from the guardrail perspective, it's very difficult to call out what exactly Gen AI revenues are.
Okay, but that must be making life difficult for any analyst, any observer, any investor, because what they're trying to understand is that when India was a little slow in joining this AI party, let's say, because now India is not seen as India is actually seen as the hedge against the AI trade. And at the same time, you have this narrative playing out with these IT companies. So how does one look at it? Like, are these companies blurring this development because they know that it's going to take them a lot of time to actually catch up when unemployment is there, there's silent layoffs happening, there's restructuring happening, upskilling happening, and they're giving some narrative in the earnings calls, but not complete clarity?
No, but so actually, to be very frank, I believe the Indian IT companies will be the key plumbers to build Gen AI technology in the enterprise world. I mean, in the consumer world, it's very different, but in the enterprise side, the workflows need to be understood, and you need to develop proper applications, and you need to understand the overall IT architecture of the client to enable these Gen AI solutions. And the other very important point to note is Gen AI as a technology is probabilistic in nature. It's not deterministic or rule-based. And in the enterprise world, you need rule-based technologies with an accurate outcome. So I believe, or rather, we have this, we believe in CLSA as well, across all the analysts who cover technology, that all the IT service companies will be deeply involved to roll out these Gen AI technology in the enterprise world. It is just that, whenever a new technology cycle kicks in, it always brings in deflation to your legacy revenues. And I guess that's where the sector is struggling. Right now, we believe that the deflation is slightly more than the volume opportunity, but it's a matter of time when the volume opportunity will start becoming bigger. So in my view, IT service companies is not an anti-AI play. If the AI wave stalls globally, you may see correction in the IT service companies' valuations as well.
Okay, and to be fair, there are a lot of headwinds. There's the US tariffs, there's the H-1B visas, there's a general advantage that the China or the US's have on AI that India doesn't. So explain this to me. 9 brokerages expect top 6 IT firms by revenue to post about 4% year-on-year revenue growth as the earnings come in. And at the same time, we have to factor in that Nifty IT index fell 12.6% in 2025, making it the worst performing sector in India. What will it take for this to change?
Yeah. No, I think clearly, I think earnings growth driven by top line recovering back to mid to high single digits. I think for the last 3 years, the sector has been struggling with uh, a low to mid single digit kind of constant currency growth. And I think that's where, in a way, we have seen there are multiple structural headwinds which have come up for the Indian IT sector. First and foremost is, in the overall tech stack. If you look at from a CIO, from the buyer's perspective, they are allocating more budgets to the software and the hardware side in terms of cloud and chips. The second headwind is, the captive, the GCCs, the global capability center, the in-house IT arms of the Fortune 500, 2000 companies. More and more work is going to them rather than to Indian IT companies. And then in terms of the market share gain opportunity, we have seen the top Indian IT companies are not gaining market share anymore at the expense of the global IT service companies. So I guess these 3, 4 are structural headwinds which may remain in the foreseeable future. But I guess if, the AI start becoming mainstream in the enterprise world, there is a lot more volume opportunity in terms of stitching the complex technology solutions. And if the revenue growth comes back to mid to high single digits, then I believe the underperformance, what you have seen for the sector last year, can revive and can recover.
Okay, a lot of depends and conditions in your answer, so I understand that this is a tough one. Let me ask you this. 8.5 billion foreign outflows from the IT stocks in 2025. That's almost half of the total foreign exits from Indian equities. This has to be corrected. Now, who takes responsibility here? The market is allowed to play the way it is, or does the government step in and help? What happens?
Yeah, I mean, these flows obviously are determined by the passive and the active fund managers, where I guess if you look at the Indian IT sector's growth prospects within the Indian market context, the Nifty's earning growth is still projected to be low to mid-teens. In that context, the Indian IT's dollar revenue growth or dollar earnings is most likely mid-single digits. So for a foreign portfolio investors, obviously, I mean, they have to be underweight on IT in that context. And that's what defines $8 billion of outflows from the Indian IT sector. So I will not blame anyone. I think it's just that how the positioning of the Indian IT sector is at this point in time. And I think this underweight, rather, I think the good part is there is nothing much to lose in the Indian IT sector from this point. If the earnings growth kicks in, the positioning is quite favorable, and actually there can be a lot more flows coming in.
Talk to us a little bit about jobs. There's this narrative around silent layoffs that is taking place, which estimate, and this is an estimation, that more than 50,000 jobs in the IT sector are at risk or are already, part of the layoffs. What real damage does it do to these companies when they're anyway, recalibrating, switching to AI, repositioning? Is it that the people who are losing the jobs are the only ones who are going to suffer?
See, I think this is sort of a restructuring which happens whenever a new technology cycle kicks in. Maybe I think this time around it's slightly more apparent where what very low-end kind of job, which is repetitive, which is mundane in work, can be replaced with the AI tools. And you can see the big four auditing firms have cut down a lot of their fresher hiring. But I believe, the Indian IT sector will take some time to restructure itself. The fresher hiring focus has still not gone away completely. And in different companies, we are seeing restructuring happening at different layers of the employee pyramid. For instance, the TCS restructuring is happening more at the mid layer rather at the junior most layer. So I guess the focus will still be there on the fresher hiring. It's just that the overall quantum as a percentage of overall employee pool, it will be slightly lower. You need more people who have a contextual knowledge, who have deep relationship with clients. So yeah, I think the pyramids going forward will be more diamond shaped in my view. And I think the job prospects, like we did this extensive surveys and the AI tours on ground, apparently the job prospects are much more weaker in the developed markets in Europe and US, where the cost of replacing the junior employees is far more higher than in the emerging markets. And that's why I think in India, I mean, there are concerns, but not as deep what we have heard in US.
Okay, in one sentence, when do you think the IT sector will recover?
I mean, tough question, Avitosh, but as of now, we are seeing that at least the earning growth prospects for the S&P 500 companies is like 13-14% in calendar 26 compared to average 9% over the last 10 years. So in that context, the US geography revenue growth of Indian IT has a very high correlation, and that ideally should do well this year compared to last year. The question is, how much is the deflation kicking in from AI, where we believe slowly, gradually it should start fading away. So one should be selective in terms of the stock picks, and that's where we have Infosys and Tech Mahindra as the top picks in the large cap, and Persistent and Coforge in the mid cap. It's not about owning the entire space, but the specific names.
All right. I'm glad you mentioned the names individually. I wasn't sure you would, so you did it yourself. I appreciate that. Sumit Jain from CLSA joining us with that perspective. Thanks so much for that. Now, India is seeking greater transparency from smartphone makers, proposing reportedly that they're going to have sweeping new rules requiring companies to share source code with the government, among a raft of other security measures. A total of 83 security standards were drawn as part of Prime Minister Narendra Modi's push to strengthen data protection amid a rising online fraud and breaches, and it's raising concern among global tech giants. India's IT secretary, though, shot back and said any legitimate concerns of the industry would in fact be addressed as consultations with industry, of course, continue. Now, Indian markets have joined the trading day. We'll be back with a closer look of what they are looking like. Green, red, what's going on? Welcome back. The Indian markets have come online. Nifty 50 looking down about 0.5%. Remember, it has been down last week, all 5 days, all 5 sessions. The rupee also a weakening at this point in time. Remember, gold has hit a record high. So the Indian traders, investors, perhaps thinking about the safe haven trade with geopolitical uncertainty at its highest, perhaps, and opposing comments from commerce ministers of both sides, India and, of course, the USA, and continued uncertainty with regards to all that's happening with the US tariffs. Now, quick look at how shares of HCL Tech and TCS are opening today. Ahead of their earnings report, TCS down about 1/3 almost, and you have HCL Tech muted, really. Checking in also on shares of Reliance now, as we mentioned earlier, its digital arm Geo Platforms is gearing up for an IPO later this year. Reuters sources say that Reliance may float just about 2.5% of the business, valuing Geo at around $180 billion. Reliance chairman Mukesh Ambani was also speaking at the Vibrant Gujarat Summit over the weekend, and he highlighted that the conglomerate is ramping up its investments in the state and will actually invest 7 trillion rupees over the next 5 years. The investments will span clean energy, AI, and sports as well, the latter to push India's Olympic bid. Now, before we wrap up, something interesting. Colorful kites filled the skies of Western Gujarat over the weekend as the state hosted its annual International Kite Festival, drawing hundreds of participants from India and abroad. The event is held ahead of the Hindu Harvest Festival of Makar Sankranti on January 14th, which marks the transition towards spring. And we could see German Chancellor Merz flying kites with PM Modi during the festival. We'll have to watch out for that one. That's all the time we have today on Inside India. Keep watching CNBC. Access Middle East is up next.